big business story at this hour. Wall Street has opened in the red once again. The Dow down over 600 points, exactly at 721 points. While I speak, 2.5% in the red. The S&P 500 nearly 3% down at about 113 points in the red, while the Nasdaq is over 3.5% down with 404 points showing in the red. So all of yesterday's gains reversed. The 10-year US Treasury yield has also resumed its June run at around 3.44%. The reasons are obvious. The Fed bit the bullet yesterday and went on to put in place its biggest rate hike in almost 3 decades after raising rates by 75 basis points. Fed Chair Jerome Powell said another 50 to 75 basis point hike could be on the cards in the July meet. The move comes in while the US government tries to race to slow the economy and combat inflation that is running at a 40-year high. Powell reiterated that the central bank was, and I quote, very, very serious about inflation. On the other hand, the Bank of England has also hiked policy rates for a 5th time to 1.25% to curb runaway inflation. So what's the path next? Will we see Wall Street in turmoil and that continuing? I'm joined now by Peter Cardillo, Chief Market Economist at Spartan Capital, to get more perspective on this story. Peter, great to have you on the show. Now, the 75 basis points hike was largely and widely expected. Why then the furor today?
Well, I think, it was expected because the market forced the Fed's hand. And I think, to a certain degree, you might say that the credibility issue rose again. I say that because a month ago, Chief Powell said that 75 basis point hikes were out of the question. And all of a sudden, we wound up with a 75 basis point hike due to inflation that continues to roll on. So that in the CPI, we saw that PPI. And I was somewhat surprised that the Fed rose rates by 75 basis points because I suspected that they wanted to wait to see for the results of the PCE, which they look at more so than the CPI and the PPI. And so I think, what we saw yesterday was the markets forcing the Fed to send a loud message that they are going to do everything possible to lower inflation. Unfortunately, that just puts us closer to recession.
What's the path ahead, Peter? We know now that there could be, and it's very likely to see another rate hike in the July meeting. 50 to 75 basis points could be in the offing. Where do you think markets will really stop this bleed that we're seeing right now?
Well, to begin with, I suspect that we will get a 75 basis point hike in July, and hopefully, instead of getting a 50% basis point hike in September, they'll go down to 25. And I say that because I think probably we're going to see some relief in energy. I think as we approach the summer months, that people will begin to scale back on driving and the use of energy in general because of high prices. Of course, the wild card remains the war. But if we should get some sort of relief, even from the war factor, then there's a good possibility that we could see oil prices drop under $100 a barrel, possibly going down to 90, and that certainly would be a relief in terms of high gasoline prices. Going to the markets, we're in a bear market, and so the bear has still not lost its potency, which means that we're probably going to go lower before we see any daylight. And my guess is that the next major test for the S&P 500 is around the 3,500 level.
Thank you so much, Peter, for checking in and giving us a sense we could be on the brink of recession in the US. That is the message coming through. Thank you once again. Now, as